Good morning, folks. My name is Brian Baker, Director of Rail Logistics at PFL. We hope that everyone had a great weekend. The stock market closed the week on a sour note after U.S. inflation accelerated to a fresh 40-year high and consumer sentiment plunged to a record low. Friday's sell-off was broad, with all 30 Dow stocks closing lower and decliners outnumbering advancers on the New York Stock Exchange by 8-1. The hot inflation numbers, which showed inflation soaring to 8.6% on an annualized rate, sparked heightened concerns about a recession and more aggressive interest rate policy from the Federal Reserve starting at this week's meeting. The 2-year Treasury yield, considered highly sensitive to the Fed rate hikes, spiked 22 basis points to 3.04%, its highest level since 2008. For the week, it was the worst showing for the stock since January, with the Dow diving 4.6%, the S&P 500 shedding 5%, and the Nasdaq Composite 5.6%. In overnight trading, Dow futures traded lower and are expected to open down this morning, minus 628 points. Oil prices fell on Friday of last week after U.S. consumer prices rose and China imposed new COVID-19 lockdown measures. When are they going to learn that lockdowns really don't work all that well and are ineffective over the long term? West Texas Intermediate crude fell 84 cents to settle at $120.67 per barrel. Brent crude fell $1.06 to settle at $122.01 per barrel. U.S. commercial crude oil inventories, excluding those in the Strategic Petroleum Reserve, increased by 2 million barrels week over week. At 416.8 million barrels, U.S. crude oil inventories are 15% below the 5-year average for this time of year. Total motor gasoline inventories decreased by 800,000 barrels week over week and are 10% below the 5-year average for this time of year. Distillate fuel inventories increased by 2.6 million barrels week over week and are 23% below the 5-year average for this time of year. Propylene inventories increased by 700,000 barrels week over week and are 12% below the 5-year average for this time of year. Propane prices were up 4 cents per gallon week over week, closing at $1.24 per gallon and up 33 cents per gallon year over year. Oil is lower in overnight trading and WTI is poised to open down $1.47 per barrel from Friday's close. Total North American rail volumes were down 3.4% year over year in week 22, resulting in quarter-to-date volumes that are down 3.7% year over year. Year-to-date volumes that are also down 3.7% year over year. 7 of the AAR's 11 major traffic categories posted year-over-year declines, with the largest decreases coming from intermodal and farm products and food. The largest increase came from motor vehicles and parts. North American rig count was up 30 rigs week over week. U.S. rig count was up 6 rigs a week over week and up by 272 rigs year over year. The U.S. currently has 733 active rigs. Canada's rig count was up by 24 rigs week over week and up by 48 rigs year over year. Canada's overall rig count is 141 active rigs. Overall, year over year, we were up 320 rigs collectively. A few things we're keeping an eye on, folks. Freeport LNG, operator of one of the largest U.S. export plants producing liquefied natural gas, shut down on Wednesday of last week and will be down for 3 weeks. The event caused a short-term sell-off of nat gas here in the United States and a spike in European natural gas prices temporarily. Freeport LNG provides 20% of the U.S. LNG processing capability. The shutdown is positive news for American consumers who have seen nat gas prices quadruple over the past 2 years, the same timeline that exports from new plants like Freeport LNG and Corpus Christi LNG began to soar. U.S. LNG plants consume 13% of the total American natural gas supply, 2% from Freeport LNG alone. American Henry Hub natural gas futures shed 6% in trading on Wednesday of last week on news of Freeport LNG shutdown. Our guess is nat gas is heading to storage, which is not a bad thing for the U.S., as we are roughly 15% below the 5-year average where we should be for this time of year. It is our guess that the shutdown of Freeport will be a non-event, as This volume can be made up to Europe if the problem is resolved as anticipated, as there was some slack in the system. Stay tuned to PFL for further updates. The reading of PFL's rail report today is an absolute must. Not only do we dive into more detail as discussed in today's podcast, we also summarize the latest petroleum by rail numbers, talk about refinery runs, overall petroleum import and export numbers, June rail numbers, and Washington's energy policies. Bottom line, a lot of great information and a lot of fancy graphs. We hope that you enjoy reading PFL's rail report today. We do it all for you folks. PFL has been extremely active in railcar storage, return on lease strategies, subleasing, mobile repair, flaring, and cleaning. Make sure to check out our just posted reports at pflpetroleum.com or call PFL to troubleshoot any questions or concerns you may have at 239-390-2885.